We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign of what's going to happen to these other workers moving forward.
Welcome to the Crypto Teacher. And guys, I come back with that video just to make you think. Now guys, I spoke about Grayscale several times about manipulating the price of Bitcoin. And now guys, we see they're manipulating the price of Ethereum. Now, if we go back to last year, remember I went over the halt. When they halted the Bitcoin and Ethereum trust, we know the Bitcoin trust is actually a ticker. So if we actually see the actual ticker, guys, they're giving their actual institutional investors exposure without the big volatility. So if we take from December up until January, so from the time it went from 20,000 to 40,000, of course, the Bitcoin trust went from $20 to $40. So it took out all that volatility, which is nothing wrong with that, guys. But just remember, they're selling a product and not an asset. So yes, they're buying Ethereum, they're buying Bitcoin, and of course, custody, Coinbase handles that. But the fact is, guys, when it comes to the actual volatility for the investor, they're taking that out. So basically, the only thing that the institutional investors are doing are betting on the actual price. So if we look at the CME futures that's going to start February 8th, they're going to be doing the same thing. It is giving you the exposure to the actual price. They don't care about the asset. Those people are going to be cashing out. And this is how they're manipulating the price. And right now we see Ethereum blasting off. Of course, DeFi's are blasting off. But the fact is, guys, it's all being manipulated. I just want to make sure we understand that. Because, yes, people are going to be buying in. But right now, do we really have the proof of the scaling or real use cases? No, we are not. They're bringing all of these products to you. These are gambling products only on the price, not the actual utility of the actual investment. So while you're paying $1,400 for Ethereum, the actual institutional investor is only paying $14. It's going to be a little higher than that because, of course, we've been up over the weekend. But remember, due to the premiums before that, it was actually $100-some, and they actually did a split. Remember, I did a video on that explaining how the actual premiums work on Grayscale. So that is a big difference, guys, in actually having the asset and just betting on the actual exposure. So what happens is, guys, the institutional investors are going to make hundreds of millions and billions of dollars whether the price goes up or down. Now, when Grayscale halted the Bitcoin Trust and Ethereum Trust, they opened back up the Bitcoin Trust, but they never opened up the Ethereum Trust. And what has happened to Ethereum keeps moving up. And now we have CME futures on February 8th, just days away. And we have Grayscale coming out with an announcement tomorrow, whether it's going to be Ethereum staking or whether it's going to be new assets. But guys, just remember that when it comes to the New World Order, everything is planned out. Have a wonderful night.
Back to you guys.
Kate Rooney, that is a great setup for our next discussion. For more on this record-setting year for Grayscale, I'm joined by Michael Sonnenschein, CEO of Grayscale Investments. Michael, thanks for being with us.
Thanks for having me.
So given these numbers that you just released, I'm kind of curious. I mean, this makes sense to me, right? Especially with institutional money coming in. It's a way to have exposure to Bitcoin. You don't have to own the coins. It's more liquid. You don't have to worry about, like, forgetting your passwords, which is something that we talked about on our air yesterday and is a big issue for some of these stranded Bitcoin millionaires. On the other side, though, I mean, for the Bitcoin purists, the crypto purists, in some ways it almost kind of gets away from the whole point of what these cryptos were created for in the first place. I guess I wonder how you see this market now growing and evolving, especially with institutional players getting more in the mix.
Well, there's really no question that what we saw throughout 2020 really is a crypto market that was not the same as what we saw in 2017. This market has matured, not just in terms of the types of investors getting involved and the size of the allocations they're making, but also the market dynamics. There's a two-sided market. There's options, there's derivatives, there's lending and borrowing. And so when you have those kinds of dynamics at play in the market, it's drawing in a lot more participation from the institutional community. And certainly at Grayscale, like Kate said, last year we brought in over $5.7 billion, which is over 4 times the amount of money we raised in the previous 6 years combined. So institutions are really showing up to this asset class in a meaningful way.
Hey, Michael, it's Josh Brown. So you were sitting in my office, I think it's a year ago this week or this month, and you told me exactly how the next rally in Bitcoin would play out, that it would be institutional in nature. And the case that you made was, for Grayscale, for your product, was that you had something that was worth more than anything else, which is a ticker symbol and or a QSIP. And if you don't have a ticker symbol and or a QSIP, it's very hard to get institutions involved because they want to own this stuff at custodian brokerage firms that they work with, that they trust. Okay, so you nailed it, and that's exactly how this year played out. One component of the asset management industry that has not yet come in, and I think this is probably due to fears about regulation, is my component, the wealth management side. So now we have family offices, hedge funds, okay, they're in. We've got large asset managers, they're in. When do you see financial advisors start to make use of stuff like Grayscale Bitcoin Trust and or other products that give them that ticker, that QSIP, that ability to be involved at the brokerage firm level?
I think it's a great question, Josh. I think looking
I'm really good at this.
The number of inquiries that Grayscale is getting every day from the RIA community, the FA community, it's coming up in conversations with their clients, whether it's client directed, saying to their advisor they want exposure to Bitcoin or crypto in general, or advisors themselves, like you, have gotten bit by the crypto bug and are realizing that it makes sense in their client portfolios. We're fielding a tremendous amount of inquiries about this. And so I would venture to guess that this year you will start seeing the emergence of a lot more participation from that community. And I think the biggest aspect of it is education. So we're super committed to developing educational resources and have quite a few on our site, particularly for the financial advisor segment. But really, you'll start seeing a lot more of that coming this year.
Yeah, and I guess along those lines, I mean, we've seen repeated attempts at ETFs that have been repeatedly shot down by regulators. But given the fact that there does seem to be this turning tide right now, if we were to finally start seeing Bitcoin or crypto ETFs, what does that mean for Grayscale?
Well, I think from our seat, a crypto ETF is really a matter of when, not a matter of if. And if anything, from the kinds of numbers that we're putting out, and the community should really be digesting this, that in fact, investors, be them high net worth investors, retail investors, hedge funds, no one is really waiting for a crypto ETF